All right, welcome to this explainer. It wasn't that long ago that money was entirely about where you physically kept it. It was about the thickness of the vault door and the prestigious name on the front of the building. But today, well, finance is entirely about what you can do with your data. So we're going to explore this massive, real-time shift from those closed, monolithic bank vaults of the past to transparent, fully user-empowered financial ecosystems.
So let me ask you a question. Who actually owns your financial data? Historically, the answer was pretty simple. The heavy, monolithic bank where that data was generated. Your entire financial history just sat there, locked away deep in their servers. But what if you held the keys to it yourself? What if you, the individual, had absolute control over who sees your financial life, for how long, and for exactly what purpose? Honestly, that is the foundational question driving this entire technological movement.
Okay, let's dive into this and map out our journey for today. We'll start by unpacking the problem with those closed vaults. Then we'll look at the big API data shift. From there, we'll weigh the real-world value against the new risks, take a look at how the MENA region is going live with all of this, and finally, bring it all back to trust and the future of open finance. Let's start right off with part one, the closed vault problem. Think back to how we historically operated in what we call the legacy silo. Just imagine these dark, heavy vaults with incredibly thick walls holding isolated blocks of your data. Basically, your data was held hostage. If you wanted to try out a new budgeting app, you were hit with slow, totally disconnected experiences, a lot of friction really, just because the bank controlled all the access. But contrast that with the open ecosystem. Here, those heavy vault walls literally shatter. Your data is shared securely, enabling instant, personalized services. And the absolute game changer here, you, the customer, control the consent. The entire power dynamic has completely flipped.
So how is this actually happening? That brings us to part two, the API data shift. To understand this, we need to define what open banking actually is. Simply put, it's the use of secure APIs to allow customers to share their financial data, always with explicit consent, across banks, fintechs, and other third-party providers. You can kind of think of APIs as a transparent high-speed bridge, like glowing digital pipelines breaking through those old, rigid walls, creating a network that communicates instantly. They literally liberate your data from the hidden vault and put it straight to work for you. Let's move to and see how this builds step by step in the real world. First, the customer grants explicit consent. Picture a clear, gold toggle on your phone, pulsing green as your thumbprint authenticates permission. Bam! Step 2, a secure API pipeline opens up. Step 3, your data flows instantly over to the fintech app of your choice. And finally, Step 4, a highly personalized service is delivered right to you. No more filling out endless, repetitive, manual paperwork. You are simply directing your data exactly where it needs to go. All right, Section 3, let's talk about the real-world value and, of course, the risks. Let's look at the major pros first, because the impact is huge. First off, a vastly better customer experience through faster onboarding and instant verification. We are literally talking about getting a mortgage or a loan approved in 10 seconds instead of waiting 3 grueling weeks. Second, it drives innovation at scale for fintechs. Third, it massively improves credit access. But using alternative transaction data, lenders can finally help underserved people who just don't fit into traditional credit scoring models. Fourth, it forces stronger competition among banks, which means better apps and lower prices for everyone. And finally, it creates real-time customer 360 insights, giving you an up-to-the-minute dashboard of your entire financial health. But as with any major technological leap, we have to impartially examine the vulnerabilities it creates. Number 1, data privacy concerns. If consent management is weak, customer trust will just evaporate overnight. Second, cybersecurity risks. While your data flows a lot faster, more APIs inevitably mean a larger attack surface, and that requires some serious, rigorous governance. Third, fragmented API standards across different regions can really increase integration complexity. Fourth, the operational overhead is massive. Monitoring these systems and ensuring compliance requires huge capital investment from financial institutions. And lastly, customer confusion. Let's be real, a lot of users today still don't completely understand exactly what data they're sharing or who they're even sharing it with. Now, let's anchor these concepts geographically. In part 4, the MENA region goes live. And this brilliantly illustrates just how fast this is moving. We are seeing a rapid, chronological acceleration of regulatory milestones across the Middle East and North Africa right now as of mid-2026. It kicked off back in 2020 when Bahrain's open banking framework went live. Then we hit a massive acceleration curve. Late 2024, Oman approves its rules. Early 2025, the UAE actually mandates open finance.
Fast forward to just recently in March 2026, Saudi Arabia issues its first major payment institution open banking license to Lean Technologies. And looking just ahead to June 2026, Egypt is slated to adopt ISO 22002 to upgrade its interbank messaging. It's an absolute domino effect.
Let's break down this regional landscape just a bit further. Bahrain is our pioneer, live and currently the most mature landing zone for new players. The UAE is also live, but they've made it mandatory, moving toward true open finance with a centralized API hub called Nebras to handle all that consent. Saudi Arabia, now live with full licenses, represents the largest addressable scale in the region. Oman is live and playing a very fast game of catch-up. Down in the early development phase, Kuwait and Qatar are actively drafting rules and using sandboxes to test out real use cases. And finally, Egypt and Jordan are in progress, heavily focused right now on building out the critical foundational infrastructure they'll need down the line. Which brings us to our final destination, Part 5, Trust and Open Finance. So the crucial point is that over the next 3 to 5 years, open banking isn't just going to stay banking, it's evolving into open finance. This isn't just about your checking account anymore. We're talking about linking your banking, investments, insurance, pensions, and lending into one completely intelligent ecosystem. Imagine a future where layered, frosted glass cards on your device seamlessly give you a 360-degree real-time view of your entire financial existence. Now, what's really interesting about this slide is this quote from our sources. Open banking is not just a technology initiative, it is a trust initiative. And that hits the nail on the head. The organizations that ultimately win in this new era aren't just going to be the banks with the most APIs. No, the winners will be the institutions that successfully combine secure architecture with rock-solid consent management, real-time biometric locks, and completely transparent customer communication. I want to wrap up this explainer by leaving you with something to really chew on. How do we adopt open finance without compromising trust? The question isn't whether we're going to adopt this technology, we absolutely are. The real question is how we protect digital consent as these financial ecosystems expand at lightning speed. It's this incredible balancing act, right? Unlocking massive real-world value while ensuring that you, the customer, always hold the key. Thank you so much for joining me to explore the evolution of our financial data. Keep questioning the systems around you, and I look forward to guiding you through our next explainer.